Hey guys, good morning. Thanks so much for tuning into the trade setup. It was very heartening to see all those comments on the YouTube feed yesterday, welcoming me back. So thank you so much in person for that. Now, before we get to the markets, just quickly tell you about this article that I really like. I mean, it's a bit now that the fact that we are not signing the RCEP is known, or John RCEP is known, but I would urge all of you, because some of us are not quite well versed with this whole concept and read the headlines but don't quite know what it is. I think if you read this article on BloombergQuint.com, it'll give you a very interesting, very complete perspective on, of course, what this whole RCEP issue is about and why India, according to these two authors, is right in not joining the RCEP as of now. I think it's an informative piece, and therefore I urge all of you, if you can, that is, and if you're interested, to try and log in and read this particular piece. Nevertheless, let's get back to the markets. So what are the markets doing? Well, I think there is a bit of green on the screen, and that should be positive for the bulls. So maybe buoyed by Donald Trump's decision to sign the stimulus bill. And of course, I think the House has passed the measure to even increase the stimulus checks to the US citizens to about $2,000 from the current $600. Now, all of you are well versed with this, so I won't go down and explain. But as a result of all of that, the US indices ended higher, and they're doing well from the scheme of things even right now on the future side, are not doing too badly. And as a result of that, I think Asia is starting off really well. I can't show you the Nikkei right now, but Nikkei is up 1.6% and going gangbusters really. But almost everything else, ASX came back from a holiday. Yesterday was ASX is the Australian index, and that is in the green. KOSPI, HSI not doing all that badly. In fact, HSI is up about 0.75%. KOSPI is not all that bad. I think KOSPI was flattish also, but not in the red. But that's the only index that is trading flat. Almost every other index is actually trading well and truly in the green, which is a good sign. Now, the key is, if we just look at what is also probably in a way aiding this whole move is what the dollar and the dollar index are doing, right? So dollar is now I think lower than the average of the last 5 years, and that's quite a telling statistic, right? It's slumped to below its 5-year averages. So the USD is certainly cracking, and just from a currency perspective, just keep that in mind. The dollar spot is this, but from a risk adjustment perspective, you see the dollar index, which is the index against the basket of currencies as well. It's at 90.1 or thereabouts, and usually a higher dollar index is considered negative. Of course, above 93 is considered to be risky for EM sphere, 90.1 or thereabouts. So it's all good right now in terms of going for equities. As they say in Hindi, aasar achhe hain. SGX Nifty should come up on your screen next, and let's just try and see where we are right now. Remember, we are within striking distance of 14,000, and looks like we'll start off well today. So let's wait and watch what do we do going ahead. Now, frankly, that's the trade setup, right? The index and the Nifty, or the Sensex in the Nifty, of course, both, but I'm just using Nifty as an example here. It's in uncharted territories, right? I mean, 14,000 is now very much in sight. I think the bank Nifty tackling the 31,000 mark is the key monitorable. Yesterday, the banks and the bank Nifty had a 1.5% uptick, and that led to the move that we saw. Now, if the bank Nifty is able to tackle the 31,000 mark well and then move inch higher, I think we have a game on our hands to knock off 14,000. Again, it's just a level really, but doesn't matter. It's an important level from nearly 7,500 at the March lows, the March 23rd lows, to 14,000, which is nearly double, right? I mean, 1,000 points shy of being double is quite a telling statistic. So let's wait and watch if that happens sometime this week or no. Banks will have a pivotal role to play, I guess. I think the markets are rewarding the real estate and real estate related plays distinctly. I was saying this in the market wrap as well yesterday, and I would watch out for that space. So, I mean, for example, DLF kept on moving, kept on circling between this 200 to 215 levels for a period of 8-9 days. A lot of people lost patience and then just surged. I mean, yeah, this chart helps, right? Just look at the 3-month performance of the real estate stocks. Nifty is up 42%. But Godrej Properties, their expensive stock, up 60%. Brigade, Soba, almost everything is, even Indiabulls real estate is doing so well. But the key is, The high flyers, Godrej Properties, DLF, etc., are now starting to find some real favor. They are creating wealth now from 189 a month ago to 231. There's been a rally in DLF as well. And that's arguably one stock that's not participated. But the point that I'm trying to make is yesterday, real estate financiers as well, Indiabulls Housing Finance, Piramal Enterprises, etc., all of them did well. I think it's a pocket that you should watch out for. So that's from a market momentum perspective. Now from a news perspective, what are the stocks that you should monitor? There is not too much, to be honest, but I'll still try and lay out what stood out for me. There could be one or two that I may have missed, so excuse me for that. But I think steel stocks could continue to be in favor. There's a lot of chatter around steel price hikes happening. China is doing that. Indian prices are higher. Automakers have revised prices because input costs have gone up. So I think I'll watch out for steel stocks. The talk of further price hikes will keep JSW Steel and Tata Steel excited in trade today. Remember, JSW was the top gainer on the Nifty yesterday. Tata Steel was up about 3%. SAIL continues to rise. There's open interest build up there. I'll watch out for the steel stocks for sure. A block deal or a bulk deal in Rupa and Company. And previously, when Sunil Singhania was in Reliance Mutual Fund and when Reliance bought a stock, its stocks went up. Now, of course, he runs his own PMS, but Abacus has bought about 12 lakh shares yesterday at 250 per share. The stock would be slightly higher, but watch out for Rupa and Company. Could be an interesting one to monitor. As I said, real estate connected stocks, so Godrej Properties, Indiabulls Housing Finance, DLF, all of these should be firmly in focus, and watch out for financials as well. Remember, yesterday Citigroup opened a tactical call on Piramal Enterprises, again from a real estate perspective too. So do watch out for all of these. I would watch out for autos. Now, viewers, just keep in mind, I mean, we don't know what will come in the PLI scheme. Yes, right? The draft was out, and auto component companies have been crying foul that we don't have the exact draft and we'll be left behind. But that's a separate argument altogether. We don't know what will happen. But based on the current draft, Nomura has come out with a note, I think post-market hours yesterday, if I'm not wrong. And it's a very long note, of course. I can't read it out entirely to you. But from the summation of what I did of the note, Nomura believes that these three stocks have the highest potential of benefits from the proposed PLI scheme. And that's why one should look at these names. They say that the scenario analysis that they have done, viewers, which is the incremental export, the incremental PBT, and PLI incentive, which is a 10% of this whole process. So the incremental PBT and the PLI incentive combined mean that companies like TVS, Ashok Leyland, and Bajaj Auto, where the percentage of PBT is high because of this PLI scheme, is the highest out here. So TVS is about 11%, Ashok Leyland 4%, Bajaj Auto 5%. A couple of others have unlisted benefits. So those are the ones that Nomura believes are the potential beneficiaries. So do watch out if the PLI schemes comes out in the current shape and form. And according to Nomura, at least, these are the three stocks that could benefit. But please do see how much they have run up before you go out and trade them when the scheme gets announced, or today for that matter. Just be mindful of that. So those are a few stocks that I would watch out for. There is also, I think, a note from Antique Stockbroking on Jyoti Laboratories. They believe that the low base and the recovery to 8 performance, and therefore they are maintaining the buy. So there are a few odd stray notes that I would watch out for. Last but not the least, I think in about a couple of hours' time, all of us would have a beaming smile on our faces, because what stood out for me today is that India bowled out Australia and now have 70 runs to get to win the second test match and level the series. I'm a diehard cricket fan, diehard Indian cricket team fan, and this has given me a lot of joy, maybe more than the markets really surging today. Certainly hope that India gets through without too many bumps and we level the series. So maybe in a couple of hours' time, all of us can put out on Twitter or somewhere else that India has won the test match, and that should be a good sign as well. But have a profitable trading day ahead, more importantly. Thanks so much for tuning in. Have a safe time.